Good evening, all. Ira Epstein, and here we are with your Spider ETF stock market flash update. And this update is for the evening of Thursday, the 7th of September, 2023. So an interesting day. You know, obviously a lot of attention has come on to Apple due to the fact that the Chinese state government has launched a salvo where their state employees, as they call them, cannot use their Apple iPhone while they're working. That doesn't mean they can't own an Apple iPhone, as I understand it, but not while they're working, not while they're conducting government business, so blah, blah, blah. What does it mean for sales? Well, as it stands, you know, it's, I heard Dan Ives of Wedbush, what was it, 500,000 units? It's not that many, given that there's, 45 million hope to be sold. But it's a problem. They were in bed with the Chinese. They didn't have the problems everybody else had. This chip war started, and everything is now expanding and going a little bit all over the board. Well, will Huawei get a better phone where they can cut into the sales? And just how much further is this going to go? Because the United States and it's us, the European partners we have, well, they're going after Chinese steel tariffs. That's next. So you can look for a deal to come there, and it's another injection in the arm. So this thing's getting worse before it gets better. Another thing you have to worry about, September is rarely a good month for the stock market. You've got the United Auto Workers. I did a lot of writing the past 2 days, and from the looks of it, the president of the auto workers is determined to teach a lesson to the auto workers, to the makers, I should say, as to what this is going to be about. GM's offered a package of about a 16% overall increase. That was immediately turned down. He wants 42%, then he wants 32-hour work week, then he wants more time off for this and that, all kinds of things. So you are headed, I think, come the 14th into a strike. Get ready for it, because if this is how I think it's Sean Fain is his name, if this is what his demands are and he holds to them, it appears that he's playing the game. His wording, and it's in my report, quote for quote, tick-tock, tick-tock. He's counting the clock down until he can go after them. You think that's good for the economy? I don't. The question is, I hope they all have a lot of money, because those workers, they'll be joining others on the line. And I don't think a 15, 16% pay rise is the worst thing that somebody could get for an opening salvo. And he just threw that out. So we'll see. Negotiations, they can do anything. Then we look at what the tech sector is doing. If you're watching, you're seeing Tesla down a little bit. NVIDIA has sold off again today. Netflix is down. Schwab down a fraction right here. As we step around, Microsoft down. You know, Apple, which normally would be going up, I think, in front of their September 12th meeting, has been getting beat up because of all this. Will they get a bounce in front of it? Hard to tell. Word is that they're going to increase the price of some of their lines of phones to something outrageous. You know, it'll get to the point where $1,400 for your phone, is it worth it? And that's what you got to start asking yourself at some point. Used to be a commodity. Now they're making it into your PC use. We all use it. The question is it worth that? When I look at Darden restaurants, you can see this, the weekly chart, still in the bottom part, still down about 6% for the week. When we come to the dailies, you've got a higher high, lower low pattern. But overall, you can see how the market's come down. Now, the interesting part was it had this one rally here that negated the downtrend, and then it just went into a vertical price decline, which not through it. Since up here, each day of the past 4 days has produced a lower and low. That's not how bottoms are typically made. The resistance I pointed out to you yesterday, you could be in trouble here if the 18-day average crisscrosses under the 150, 350 area. So why did I bring this up? What bothers me about all this is it's discretionary spending. And as we get further along here, people are going to have to ask themselves, gee, do I want to eat out that much? For the people that are going to have student loan debts coming up in October, that's another $400 or so a month that they're not going to have to go to spend at one of this group's restaurants or some portion of it. Got to think about discretionary spending in an environment like this. You then take a look at the Bollinger Band. I would certainly never tell a client of mine to go short at a Bollinger Band. I'd be waiting on bounces. Could it just keep leaking lower? Yeah. Is the market in a sell configuration? Here's what it is. It's in a clear-cut downtrend, but it's not in a sell configuration yet. Either we get an embedded reading, and do we have one? Maybe it's a little different here. Both numbers are under 20. Both numbers are under 20. Both numbers are under 20. Both are under 20, and not here. Oh, they were. One more day. So it's 1, 2, 3, 4, 5 days in a row where we have had, 6 days in a row, I guess, where we have had the market in its embedded reading, and not one of these days have produced a rally off of that. Interesting, don't you think? We haven't had a day where you've made a higher high. You'll get one or two, but as long as you stay embedded like this, especially up in this 153.50 area, about $4 higher, I think the pros will be waiting for the market to hammer it and say, I've had enough, and they either dump or there'll be the short sellers waiting. That's what I think. In Rivian, you are now have some price distribution going on. You hit the upper band, you've pulled back, you're drifting around. If you embed, I'll get excited to the upside. You know, I'm in love with this stock longer term. But would I tell a client to buy against the Bollinger Band? It's a guarantee I will not do that. All right. So the daily chart, not my favorite. Market is in overbought territory, but not embedded. Then we get the gasoline fund, which is trying to act more bullish than bearish, but I think it's caught in the sideways action. I'd like to see which way it comes rolling out of here. Typically at this time of the year, gasoline isn't the market you want to own. It's heating oil. The switchover takes place. So I'm looking at this. I don't see any sell signals developing. I don't even see one if you broke through yesterday's low. I just see a market that might want to buck up to the resistance of 73.02, about 80 cents higher, but I'm not looking for it to go anywhere. When I look at XLF, this is the financial services, they're stuck at the 18-day average, and they too have brought in the Bollinger Band. So this big rally that we had at the end of August, you do remember that, right? It seems so far away. A lot of the markets have now paused, and what's happening is the Bollinger Bands are wrapping their arms around the market, and a lot of them are just trading against some key moving averages, biding their time. UGA, this market for sure. XLI, not a trend. Again, one of these situations that we have, the higher high, lower low. Again, the market took off from mid-August, made a good rally, and gave it all back. And when you do that, you got to restructure the chart to see, are you bullish, bearish, where are you? So the daily charts aren't doing this, but I will tell you, over the weekend, and remember, at the close of business tomorrow, I'll start looking at doing the weekly charts for you. That might tell us a better story. When I take a look now at Disney, Disney's just had nothing but problems, you know, one after the other. It's an embedded reading on rallies. I contend that because it's embedded, the pros are waiting to sell this market short. I cover it in the morning subscriber video. That's where you want to probably take a look at that. In RSPD, this is something new. And again, I wanted to go to the consumer discretionary because I think the consumer's hurt. I think that the consumer doesn't even know he's hurt yet, but their credit cards are maxing out. And I'm talking the general person, not the super wealthy guy out there. I think that they have more debt coming on. I think that, as we've said, their discretionary spending, now you got to figure the summer's over. Do they hunker down? What do they do? And I don't see wage gains going the way they used to go, other than for the auto industry, which is one way or the other. They've already told you they won't take a 16% increase. I think that's very telling what they're looking for. Whether they'll get it, I don't have the slightest idea. How much pain do the automakers want to take on first? But 42% increase, I'm willing to take the over-under on that. I'll take the under. They're not getting it. When I look here, I see the resistance at the 18-day into the 100. When I take a look over at XHB, as I told you in the home builders, I wouldn't bet against the home builders here. I had today a real estate person knock on my door. Do I want to sell my house? I didn't invite them over. It was so interesting, okay? They're looking for property. And I find that very, very fascinating. He had called. I didn't have an appointment with him, but I knew who the person was. And I said, no, I'm not interested right now. But I knew his name. And so I wasn't scared when I opened the door, and it was just fascinating. And that's how desperate they are for property. There's no property. Higher high, lower low, fighting a battle right here. You actually could get a buy signal temporarily if you take out today's high, and then you wouldn't want to see it under today's low. That would be very bad action. So that could give you the first move that you're coming back to the upside in this market. I'd look at that. XLE, the energy sector, I don't mind sharing with you that I told my clients today, I think it's time that you cash in on the OIH for a bit here, and we wait to see if we get a pullback. If not, blame me that I missed it. But you had a wonderful ride to the upside. In GLD, higher lows, higher high, culminated at the Bollinger Band. You pulled back. This is where the support is. So unless the gold cracks through this low right here, and let's see if I can get the charts to do that. I can't. So I should have labeled it for us. I wouldn't have to do this. Let me just get there. I just want to see it myself, the number. And this is the low I care about, right here. That's it. I don't want to see the market under 177.41. As long as that's not violated, because the market has worked off the overbought condition, the pros might nibble. Now, here's what I think happens. If they nibble in there, they're only risking roughly 26 cents, whatever it is. I don't want it under 41. But if it gets under 41, the pros are liable to go short, looking for the market to come down to this lower band. You're starting to go in that sideways action where whipsaws can develop. In the silver market, it's been straight down, but you're into oversold territory. Could you get down here? Yes, but that's an awful big ask. Really, in the momentum, could happen, but it's a big ask. I'm certainly not in the friendly camp. And in the copper market, you know I have no faith in what China's been saying, and therefore I think that this rally into the 100-day average in the green, the 200-day, I thought it was going to fail with the Bollinger Band, and it has done so already. So this market is void of a trend at this point. It was a nice rally off this low. You got to give the market credit. It did make a $3 rally, and that's a nice rally in a $30-some-odd stock. But I think the market is now void of a trend. In TLT, I'm looking at this market and just saying to myself, I'm looking for the next shoe to drop, because every day the Fed's not the Fed, I want to get the grammar right. Every day the U.S. Treasury, they come out they do all these auctions and they keep driving the rates higher. Now our Fed has to make some real decisions, all right? What do they do about inflation? I was looking at John Williams was talking today, Goolsbee was speaking. I covered the two of them in my newsletter tonight. And there were 4 other Fed members. I didn't see a word in the press about whatever everybody else had to say. And people are all saying still the same thing. Data dependency, that the Fed has to keep pushing if they're really going to go to that 2% inflation number. Labor is a surprise. It is stronger than they thought. Did you look at today's jobless claims? We're at the lowest number since February and January. Whoa. And I'm talking both the continuous claims and the initial, all right? This is not a weak market in labor. It's still stronger, and it's surprising people how strong it is. That is supportive of the dollar. I mean, in the world of economics, when you look at countries, we are by ourselves. There's no one quite like us. It's amazing. And I'm sure it's got the Fed perplexed, all right? You would have thought going from 0 to 5.25%, we'd break something. Hasn't broken. And you see the dollar's just winning the kingpin. The yuan was making new highs of 0.7329 or so, 7329 offshore and onshore. The peso starting to stabilize a little. We're going to be saying goodbye to Mr. Obrador. We're going to get a new Mexican president. Some of the candidates want a weak peso. They think it's ideal for their type of trade and what they want to do with the country under their rules. So that's something to think about. Japan keeps threatening that they're going to intervene, the threat, but they haven't done anything just yet. And in FXE, well, Miss Lagarde's got her hands full. Is anybody paying attention to what's happening in Germany and Italy? Their industrial production is crashing. Their trade with China, and that's their big trade partner, has absolutely contracted rather dramatically. China's hurting, they're hurting. That's how you have to look at it. We're still their biggest trade partner. People don't realize that. But when you take a look at where the Germans do their trade in the Eurozone, their big partners are the US, China, Switzerland, and the UK. Got that? Those are their big trade partners. So you put this all together, you got to come up with what to do. This is the first week back from vacation, so don't get crazy with it. All right? The market will give you the setups. You got a whole quarter until we get to Christmas. There's going to be a lot to be doing, and I'm already seeing that the embedded readings are set up. Modern Trader, technical tips, Gantt square of 9. Really fascinating reading. Rules for the bottom fishers, and I know there's plenty of you and top fishers out there. But everything here in these articles is fascinating because there's grammar with it, pictures with it, shows you what to do. Now, this is relative strength. It goes right along the idea of slow stochastics like I use. I used to use relative strength, and then I switched gears. I went to MACD, and I ended up being a true student of slow stochastics and Bollinger Bands. I think they're two of the most important rules out there. I think the swing line's number one that I developed, not because I developed it, but because I can take your 13-year-old and they can tell you what a trend of the market is sitting with me 5 minutes. What can you do with it? How do you get all this? Go to iraepstein.com, free offers up here, and it'll take you right into the section. Get price counts when you're there. I think you're going to love what price counts do. They are one of the coolest tools you'll see to give you an idea of where a market might be headed after a trend sets in. Very fascinating. Have a good day.